Welcome back. It's still Business Incorporated on Channels Television. We head to the markets now with Will Ebong. But first, I'd like to ask Will if you saw the field queue. No, I know a couple of people who spend the weekend at petrol stations,
yes, so
in an attempt to get liters of petrol, which they're going to pay extra for, so that they can get to work today.
It is quite heartbreaking to know that you're in your country, and you can't even feel at ease knowing that there's no supply of, petrol for your car, your homes, your businesses. Because you look at it and say, how do I manage time? How will I manage productivity if I spend all my time at the filling station? How would I reduce the cost of production if I'm buying fuel or energy?
I think the heartbreaking part of it is, when they say someone has soap in his eyes in an ocean. I mean, this is a country that is rich in crude.
True.
We just spoke to, one of the owners of modular refineries in the country. We've heard Dangote, asking, give me crude. I mean, Dangote is in Nigeria. I think we're the biggest. We beat Angola in oil production, and yet Dangote has to import WTI from the United States. These are just the facts that break a Nigerian's heart.
And when you think about it, it is not today. It's one of the issues now. I was talking to one of the guests. It's like, we need continuity we need a blueprint. Like he's mentioned, we need to get it right. How do we ensure that we get our supply, we produce oil, and we sustain that production? What are the things we need to put in place to ensure that maybe there's no crude oil theft? You said it's an enemy to oil production in the country, but we need to ensure that this is resolved. What do we need to peg it? What do we need to put a stop to what the crude theft in the country? We need to resolve these issues and ensure that they are sustained. Because if we continue like this, I don't know how much more they can take. We don't want...
How much more can you take, Will?
Anyway. I have to hold on.
Okay, all right.
I have to hold it.
I'm holding too.
Yes, hold it. And I just have to say that I'm so sorry about last week. You had to report the market. It was red and red and red. I saw that you were changing your clothes. It was just red clothing. Red clothing. I was like,
it's because you were not here. Now that you're here,
the market going to be green. Oh, fantastic! But I did start off with the red, just hoping that I'm just going to be in the middle somewhere. But let's just kick off and see how major stocks in Africa performed at intraday. Sentiments were mostly positive. Nigeria's NGX was trading up by 0.37%. Luckily, contrary to what we saw last week, a bloody week. Expectations for last week was like it was going to close positive, because we did see that jump in O and O, but we did also see profit taking towards the end of the week, and Boa Cement also dragged the index down. South Africa's JSE was also trading up at intraday nearly 1%, and also we see Egypt trading down, however, not in positive territory, nearly 0.5% down. And Kenya, casting a look back into last week's trading activity, Kenya closed Friday's session in the green, 0.45%. Now, before we check in on other markets outside Africa, let's have a quick look at what's happening in Nigeria's debt market. Today, the federal government is issuing the first series of its domestic dollar bonds to raise at least $500 million from local and foreign investors. Now, the program is the first of its kind in the country, with the minimum subscription of $10,000. But as always, many would like to know how this will impact Nigeria's economy, and this is all happening today. For this, we are joined by Professor Uche Waleke. He's a professor of capital markets and director, Institute of Capital Market Studies at the Nasarawa State University. He joins us from our Abuja studio. Good afternoon, Prof. It's good to have you on the program.
Yeah, thanks so much, Wills. And good afternoon, Amy.
If you can hear me, the auction is taking place today. What are the expectations for the bond with regards to Nigeria's current economic situation?
Well, overall, I think it's going to be positive on the part of the government that is looking for funds to plug fiscal deficit. It will be a cheaper source of raising funds. The alternative would have been to, of course, issue Naira bonds that are beginning to be expensive, especially against the backdrop of a high interest rate environment. Another alternative would have been to issue Euro bonds, again, which would of course also mean higher cost. So for the government, it's a cheaper source of alternative source of funding the deficit. And for retail investors, institutional investors, that's a very good way to diversify their portfolio. And I think it's also something that will help deepen the capital markets, particularly so because this is the first time, and we expect that it's going to be a door opener, to open doors for the private sector to also come in to issue dollar bonds in our domestic market. And I also think it will also free up, if you like, funds for the private sector, because the more the government comes to borrow, do naira bonds, of course, you should expect that private sector will be crowded out, particularly now that banks are recapitalizing, banks are looking for funds. So it's important for the government to pull back and allow the private sector to have a feel of the market.
Talking about pulling funds and looking for money, since local investors, you say it's a good thing that we can now have local investors participate in the dollar bonds, but where will they source these dollars from? I'm sure a lot of people are wondering, how will the quest, and if they have to source for the bonds, the dollars, how will the quest for dollars, would it not put more pressure on the naira?
Well, that's one of the concerns that has been expressed, including by the International Monetary Fund. The dollar domestic bond is targeting not only diasporans, Nigerians in diaspora, but also targeting local investors, those people with money in dorm accounts. So where will the funds come? Of course, it's those with funds in their dorm accounts, and also the diaspora, the non-resident Nigerians in diaspora. The diaspora remittances to Nigeria, according to the World Bank, in 2023 was as high as $19.5 billion. But only 10% of that, we hear, came in through the formal channel. So this is one good opportunity for diasporans to invest in the Nigeria, the government's, the bond. But again, yes, the concerns are genuine. Especially when the funds are mobilized substantially from onshore, from domestic investors. But I also hear that one of the things the DMO is doing in that direction is to ensure that people don't even go to the parallel market to buy this dollar, to invest. Okay, so the DMO is saying cash will not be allowed for purposes of investing in these bonds. You don't go and bring, cash, that's, dollar cash from the parallel market. And even if you're getting it from your dorm accounts, it must be money that has been there at least 30 days before the opening of the offer. Okay, so what it also means is that you don't expect people to go to the black market, buy dollars, put in their dorm accounts to be able to launder. No. Okay, so I think they have put in place a number of measures to ensure that, that doesn't happen. So essentially, the funds are expected to come from not only those in diaspora, but also retail investors, high net worth individuals, here in Nigeria.
Thank you so much, Professor Uche Uwaleke, for your perspective there. Professor Uche Uwaleke is the Professor of Capital Markets and the Director, Institute of Capital Market Studies at Nasarawa State University. Thank you for joining us on Business Incorporated.
My pleasure, Wells. Thank you.